Welcome to The Explainer. Today, we're diving straight into the latest land price look report. And let me tell you, this one's a big deal. For anyone who follows Japanese real estate, you know this report is a key indicator. But what it's showing us this quarter, well, it's a story of unanimous nationwide growth that we haven't seen in a very long time. So let's get into why that's happening. Okay, so here's our game plan. We're going to start with the one headline number that says it all. Then, we'll break down what's actually powering this market, zero in on the specific hotspots, and then, and this is the important part, we'll tie it all back to what it means for you as an investor trying to make your next move.
If you're going to remember just one number from this whole thing, it's this one, 100%. That's right. The latest report shows a market where literally everything is going up. But, as you're about to see, the story behind this simple number is actually pretty complex.
So what does 100% really mean? It means that for the second quarter in a row, not a single one of the 80 major urban districts they survey saw prices go down or even just stay the same. It is an incredibly powerful signal of a widespread upward trend that's got some serious legs.
And believe me, this isn't just a flash in the pan. We are looking at a sustained, rock-solid trend here. For residential land, we're talking 14 straight quarters of growth. That's 3.5 years. On the commercial side, it's been 7 straight quarters. This market is definitely built on a solid foundation.
So, okay, we know everything is rising, but the question is, how is it rising? Is it all just creeping up, or are some areas exploding? Let's actually put some numbers on this and see how that growth is spread out, because this is where the story gets really interesting. And here's where we see the real nuance behind that 100% figure. Yeah, the growth is universal, but it is not uniform. The vast majority, that's 75 districts, are seeing this nice, steady, moderate growth. But you've got this elite group of 5 districts that are seeing some really high-octane growth. And these are the hotspots that are really driving the whole narrative. So what is actually causing all this momentum? Well, it's not just one thing. It's really a tale of 2 very different but equally powerful economic engines that are pushing the commercial and residential sectors forward. And you can see that divide perfectly right here. On the commercial side, it's all being lifted by 2 huge factors: the massive rebound in tourism and these really ambitious, large-scale redevelopment projects. But flip over to the residential market, and it's a totally different story. That's all about intense demand from wealthy buyers who are all fighting over a very, very limited supply of good land. Now, if we look at those commercial hotspots, you can see these forces in action. You've got your tourist-heavy districts like Ginza, Kabukicho, the area around Kyoto Station. They're all directly benefiting from tourist dollars. And then you have places like Nikono, where the market is already pricing in the future value of these massive redevelopment projects that are underway. Now, over in the residential world, the story is completely about scarcity and premium demand. Of course, you have your prime Tokyo spots like Bancho and Akasaka that are just magnets for wealthy investors, both from Japan and overseas. But the real standout, the one you need to know about, is Fukuoka's Ohori district. It's the only residential area that hit that top tier of growth, and it's all being fueled by this insane competition for land. And listen, this note on Ohori is absolutely critical if you're an investor. What this is telling us is that the demand is so off the charts strong that buyers aren't just willing to pay high land prices, they're also swallowing soaring construction costs. That entire extra cost is just getting baked right into the land's value. That is a huge signal of market strength. And don't make the mistake of thinking this is just a Tokyo or Osaka story. Not at all. The data makes it crystal clear that this upward trend is spreading out to key cities all across the country. I mean, just look at this. Every single slice of the pie is growing. From the 35 districts they track in Greater Tokyo to the 18 districts in other key regional hubs like Sapporo, Sendai, Fukuoka, every single market is part of this synchronized rise. It's really something to see. In these regional cities, they aren't just getting pulled along for the ride. No way. They have their own powerful local growth stories. You look at Nagoya, and its market is being totally supercharged by that huge linear Chuo Shinkansen project. And the entire Kyushu region is just booming, thanks to massive investments pouring into the semiconductor industry. Okay, so we've established the market is red hot. Now for the million-dollar question, right? In a market where a rising tide seems to be lifting all boats, how do you find the real opportunities? And just as important, how do you avoid the hidden risks? You know, it's so tempting to see a universal rise and think, great, I can just throw a dart at a map and make money.
That would be a huge mistake. Actually, the opposite is true. When everything is going up, you have to be more selective than ever. You have to drill down into the fundamentals.
So for any potential investment you're looking at, it really boils down to this three-step analysis. Number one, profitability. Can the deal actually stomach both high land costs and high construction costs? Number two, durability. Does it have strong enough fundamentals to survive if interest rates go up? And number three, catalysts. Is there a clear, real growth story for that specific area?
A key metric you have to be watching like a hawk here is the cap rate. You can just think of it as the return you expect to make on a property. As borrowing costs go up, the gap or the spread between that return and your loan payments gets smaller and smaller. And that squeeze makes properties that can actually grow their rental income way more valuable and a lot less risky. So the big takeaway from all of this is pretty clear. The macro picture is positive, no doubt about it. The wind is definitely at the market's back. But real success, that's going to be found in the micro details. It's about looking past the exciting headlines and really confirming that the fundamentals of a specific property in a specific neighborhood truly justify that rising price tag.
And that really leaves us with a final question for every single investor looking at this market. It's the essential challenge right now. When everything on the surface looks valuable, how do you find the assets, the opportunities that are truly priceless?